Good afternoon, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 19th of July here in 2022. And we're going to get right to the point, which is Netflix earnings. Now, just for the sake of the video, it is a few minutes after the close. So if you are ever interested here in TheoTrade or in general about what the earnings were, there's lots of places to find that. But you can do that here in the live news gadget, which is right there. And just type in the stock Netflix. You can take a look at the memberships, or paid memberships, increase, decrease. Again, we're not going to go through this in the video because there's a lot of information on that. But what we'll talk about will be the expected move and what we'll set up for Wednesday's session. So let's get started right there. There's the news, there's the earnings, there's the numbers. But going back to the implied volatility and the expected move, roughly speaking, that'll be for Netflix shares. Where are we looking at here? 231% implied volatility. That translates into this is Friday, so not exactly earnings based strictly, but nonetheless, it is the implied volatility going into the earnings, which is $34 up or down. And if you talk about a straddle, and I was at the point I was pricing this earlier, it was right at $200 and it's going up just a little bit. But the straddle at the money, $200 per share. That prices, again, we're up here, but that priced right before the bell at about $31. So what does that mean? Where are we looking at and what's going on? If you look at the implied volatility expected move or the straddle-based, price-based expected move, it's somewhere between 31 and 34. That, if you take the closing price up 34 or down 34, puts an expected move, I know we're seeing it bullish, but up to about 237 or 235. Or down to about just beneath 170. On the earnings, $3.20 per share. Netflix is up 225. And right now it's at 217. So we'll be looking, in fact, you'll know by the time the video is produced, by the time you're watching the video, and most importantly, for Wednesday session, you'll know whether or not we had that full push up to that 235 or 234 level, and how the stock is trading and whether or not that plays into the NASDAQ in any particular type of way. And just looking at our NASDAQ here, where is Netflix? Netflix is over here. So in the grand scheme of things, it will be up on tomorrow's session. But assuming these price stays where it is right now at the close of this direct earnings report, not going to be a major or significant market cap mover in the NASDAQ. We have Microsoft, Google counts as one, or Alphabet, Facebook, Apple, there's NVIDIA coming up in the monster of tech list, or at least the market cap list, right there with Amazon, and Tesla. So right now we're talking about Netflix. Tomorrow we'll be doing the same thing in Tesla shares. And to give you a sneak peek about Tesla shares and what we're looking at there, its implied volatility coming forward or coming out, not as high as Netflix, but it's about 98%, which gives us an implied or expected move type logic of about 52. What might that result in for Tesla shares? And this is how you would think about or conceptualize or plan, maybe strategize what to do. So take that current price, again, at the close or near the close, take that stock up about, have to go off the chart, roughly $52. And that'll be right here. So roughly, just simple math, quickly, $7.90 per share, or down that same amount, which would put it down to about $6.85. So we'll have a clearer perspective on Tesla before the bell, and after the bell, and before the earnings, because Tesla will report its earnings after the bell tomorrow. But before the bell, we'll have Abbott Laboratories. So let's take everything else off the chart, all those expected moves. If you have positions, butterflies, or anything else within Abbott Labs, you are positioned into its earnings before the bell. So 50% implied volatility, $4 up and down. And we'll have Biogen, not necessarily a stock you might want to trade. The option market is illiquid. Bid offer spread is too large. And the price of the stock might be well beyond a general stock that's $50 or $100 or even $150. So we would prefer to use options in a stock like this, but it does not quite have the liquidity. Nonetheless, it will have earnings, Biogen, if you're trading it, before the bell on Wednesday. Outside of Tesla, there's a series of earnings coming up. Those are on Thursday. Union Pacific, AT&T, Dow Chemical, Danaher, Philip Morris, and then Capital One Financial reports after the close on Thursday. So we still have earnings in play. We've gotten behind us, at least here on Tuesday the 19th, some of the financial earnings. And that resulted in a catalyst bounce or rally, bear market rally nonetheless, in some of the financial names. And things we watched were Goldman Sachs, Morgan Stanley, Bank of America, just to name a few. Capital One Financial was up in today's session as well. And nothing at the moment is out of the ordinary. It's a bounce. It is a big bounce. And the market itself, which we haven't even got to at the moment, is just a bear market rally. Bear market rally means we are downtrending 20% off the high, and we continue to have these series of lower price lows and lower price highs. Beyond that, we do have falling daily moving averages, and that's going to be true in Capital One and the financial sector itself. While we're here, we'll be discussing technology stocks coming up, but technically the big name that will report tomorrow, well, right up here to Tesla, we may think of it as a technology company, but technically it's a consumer discretionary. Tesla falls under the category of discretionary right there with Amazon. Think of it as a retail stock. We buy a Tesla, even though it may have good technology. Amazon will be an internet company, but it still sells things. Tesla sells cars, Amazon sells just about anything you can imagine. These are communication, that's Google, Facebook, and others. And the technology names will be right here. And that would include NVIDIA, Microsoft, Apple, and others. But again, we can look at some of those names in the NASDAQ 100 or the broader NASDAQ itself. Speaking of the broader NASDAQ, we see the biggest gain in two of the indices. First, the NASDAQ, actually a little bit small, a little bit larger gain in the Russell. Russell, again, is our small cap index. If we look at it, doesn't necessarily have stocks that dominate the Russell 2000. That is just small cap names. Some of them you may know, AT&T and others. Most stocks you may not have a general day-to-day familiarity as you might with Tesla and Lockheed Martin, Johnson & Johnson, Netflix, Capital One Financial, and many Coca-Cola, McDonald's, etc. Stocks that make up the S&P 100. These are small cap names, and they will move to a different money flow or order flow because they're a different type of index than the NASDAQ, S&P, and of course the 30 stocks in the Dow. Just take a quick look. There are the 30 stocks in the Dow. Not something we discuss too much at TheoTrade, but they are there. Apple being part of it, as is Microsoft. Nonetheless, the Russell is getting a strong bid, or again, just to quantify it, a bear market rally. Bear market means we're 20% off the high. Take that high, take the little low here, even go into the current price, and we are, from that, 26%, see it right there, 26% off the high. That's a bear market to be meeting the definition therein. And the trades or the short sell opportunities are the bear flag trades that come when the market retraces or completes, anything that we want to think of, a bear market rally. That's about where we are at the moment. Same is true in the spiders, which is your SPY or S&P, SPX, ETF. Not much different there, just the numbers. And of course the trade logic. S&P to be similar with the futures, and of course the micros if you trade micros with us. NASDAQ is the technology sector or technology heavy index, and down the list. Outside of the equity market, which is going to be the focus of tonight's video, but we'll just take a quick look around. The bond market was off today, not by much. Bonds as seen by TLT, which is a tradable ETF, remain in their own bear market, or I do prefer the word downtrend, but it's still a bear market. How do you define that? 20% off the high, and the bond market is 25% off the high, at least as seen by TLT. The only major product in here that we follow would be crude oil, and it remains bullish or positive, not necessarily by a lot. Well, I should say, 24% may be a lot, but it's not quite what it was earlier in the year. And that will pinpoint or play into the energy sector, which is XLE, and that's the only sector that remains bullish on the year. The others are defensive, and they, while down on the session, down on the year, and it's mid-year, they're not down as much as the more sensitive financials, technology, retail, and of course industrials, and then materials. These would be the defensive sectors. They include staples, healthcare, and then utilities. Utilities are roughly, just a little bit, I almost want to say flat on the year, but just down by about 2 to 3%. And those are defensive sectors. Again, they're at the bottom of the list. Staples, healthcare, and utilities. That's XLP, XLV, and XLU. They're getting a little bit different performance than the stronger sectors in today's session, which are the market leaders, or might heard them called the risk-on sectors, financials, technology, and discretionary. But then again, you can always see this through the Market Watch tab, visualize, and the heat map, and see exactly the sectors, how large they are, and which stocks make up the biggest part of each of the sectors. That is the big picture as we're going through the week of earnings. We'll come right back to Netflix, and Netflix's earnings, again, up after the session, and just to pinpoint how you might see that if you're not familiar with how to look at earnings after the bell, there'll be equities on the equities tab. We'll show the extended hours, and then we'll be able to see what the price is and the price change after hours. You can also see it here on the trade tab in terms of net change and anything else that takes place after the bell. Easiest way to see it, again, for me, is going to be your chart here, equities, extended hours, and what are you doing after the bell. Earnings will play into that as well. To read about those earnings and learn anything else about that company, that'll be here in the news tab, or one more point about the analyze tab, and we'll go to the earnings section right here, or the fundamentals. As always, take care, be safe. This is Corey Rosenblum with tonight's Theo video update for July the 19th, 2022.